in the dollar. Everything that they're going to do as a result of what's going to happen is going to make what's going to happen worse. I think gold is going to be worth, at a minimum, half of the Dow Jones at some point. So I mentioned that the Dow was at 45 ounces of gold, 1999, and now it's 11. So I think it's going to be down to 2, probably maybe lower, but let's just call it 2. So where would that be? Well, if the Dow went to 20,000 and gold went to 10,000, that would do it. But, that would be a big bear market. The Dow's like 46,000. So it has a long way to fall. Let's say the Dow goes to 50,000. Well, now gold has to go to 25,000. And now you got 2 to 1, right? So that could be, a way it happens. Or the Dow goes to 40,000 and gold's 20,000. Yeah, it was 25,000. I think that gold is going to be worth, at a minimum, half of the Dow Jones at some point. So I mentioned that the Dow was at 45 ounces of gold in 1999, and now it's 11. So I think it's going to be down to 2. Probably maybe lower, but let's just call it 2. Right. So where would that be? Well, if the Dow went to 20,000 and gold went to 10,000, that would do it. But, that would be a big bear market. The Dow's like 46,000. So it has a long way to fall. Let's say the Dow goes to 50,000. Well, now gold has to go to 25,000. And now you got 2 to 1, right? So that could be, a way it happens. Or the Dow goes to 40,000, right? And gold's 20,000. Yeah, it was 25,000. Well, if you look at the last 2 major declines in U.S. stocks, they ended with the Dow and gold at 1 to 1. That was 1932 and 1980, right? At both of those major stock market bottoms, you could buy the Dow for about an ounce of gold. So I'm not saying that the Dow should be worth 2 ounces of gold. I think it would be cheap at 2 ounces of gold. I'd be happy to buy the Dow at 2 ounces of gold. I'm just saying that if we get the type of decline that I think, the Dow's going to get very cheap. It's not going to, the bottom of this bear market, it's not going to be fair value. Stocks are going to get ridiculously cheap at the bottom, just like they're ridiculously expensive at the top. But, depending on how much money we print, if we were to go back on a gold standard, I think you'd probably have to have $20,000 or $30,000 gold at this point to make it work, based on how much debt we have and how many dollars are out there. And I do think the world is right now going back on the gold standard without us, right? I think foreign central banks are, going to be backing their currencies predominantly with gold. They may not make them convertible into gold, but their primary asset that they will hold to defend the value of their currency will be gold, not U.S. dollars. And what that means is they're not buying any more treasuries. And you know who else is not buying treasuries anymore? Maybe Americans. Morgan Stanley, just a couple of weeks ago, their strategist said that we should recommend, instead of a 60-40 portfolio, 60% stocks, 40% bonds, 60-20-20. 60% stocks, 20% bonds, 20% gold, which is a sell signal on bonds. Sell half your bonds and buy gold. Now, if Wall Street does that, if the average American who has a 60-40 portfolio makes it into a 60-20-20 portfolio, that means Americans are going to go on a selling spree, getting rid of their bonds and just buying gold. So how is the U.S. government going to finance these massive deficits if nobody wants to buy the debt they're selling? That's the problem. That's why the Fed is going to crank up the presses and do massive QE. But that's just massive inflation. That's just throwing gasoline on this bonfire. And, Jamie Dimon, just today I read a quote. Jamie Dimon said he thinks gold can easily go to 10,000, which, can go a lot higher than that. But here's what Jamie Dimon said. He said for the first time in his career, it's not completely crazy to have some money in gold, right? Now, it's never been completely crazy. In fact, it's been totally sane. Jamie Dimon just didn't understand why. Like when guys like me were telling people to buy gold when it was 300, 400, 500, 1,000, right? It was because Jamie Dimon didn't get it until just now. Now he's starting to worry about the stuff that I've been worried about for 20 years. Now Dimon is finally worried about it. But now more people on Wall Street are starting to worry about what they should have been worrying about all along. The problem is now we're so far down this rabbit hole, there's no way out of it, right? So it's, when I first started talking about this, it was early enough to do something to prevent the crisis. Now, all you can do is, buckle up, right? The crash is coming. So yeah, you got to buy gold. You got to buy silver. People should go to Schiff Gold. In fact, I tell people now when I do interviews, if you're watching this interview, don't even wait till the end. Put it on pause, go to Schiff Gold and buy some gold and silver. Because if you wait till the end of the interview, it'll be more expensive. So just go in there and buy it now and have some real money. And then, also I think people should be investing in foreign stocks, gold stocks. I mean, gold stocks, have more than doubled this year. I have stocks I own that have tripled and quadrupled, but they're still cheap. This is just the beginning. Hardly anybody owns these stocks and hardly anybody owns gold. We are at the very early stages of what is going to be a generational bull market in gold and silver and these mining stocks. This is really the first year of the bull market, but it's not going to end in 1 year. It's going to last, I think, for the rest of the decade and probably most of the next. Gold is a warning sign, A, that the Fed has got the policy wrong, that these rate cuts are a mistake, and that, in fact, rates are too low and they need to be raised. But I also think it's a bigger warning that the world is getting rid of the dollar, that foreign central banks, foreign governments are losing confidence in the dollar as a stable long-term store of value. They have no confidence in the fiscal responsibility of the United States Congress or the president to get his house in order. And they're losing confidence in the independence of the Fed, which is being, beat up constantly by Trump, putting political pressure on the Fed to cut rates, print money, create inflation. And so I think the world is moving away from the dollar. And we haven't seen this kind of movement in the price of gold since the 1970s. This is the best year for gold. Gold's up almost 60% on the year. Oh, and you have to go back to the 1970s to find a year where that happened. And there were several years during the 70s when that happened. But the significance of the 70s is we went off the gold standard in 1971. And when we did that, it was a game changer for the monetary system, and the dollar lost a lot of value. And so gold went from $35 an ounce to $850. But what's happening now, I think, is just as significant, maybe more so, because now it's not the U.S. that's going off the gold standard. It's the world that's going off the dollar standard. And what this means for America is a complete collapse in our entire economy and our standard of living, because over the past 50 years, we've grown completely dependent on the dollar's reserve status. That's how we're able to live beyond our means. That's what makes these trade deficits possible. That's why we can buy stuff, consume what we don't produce. That's why so many Americans can borrow without anybody saving, because we're tapping into the rest of the world's productivity and the rest of the world's savings. And the vehicle to do that